Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right, we are back with another episode of the Real Estate Investing Club. I hope you guys are having a great day, great week, wherever you are and whatever day it is for you. As always on the podcast, it's Friday, so we're bringing that good Friday energy to you. We have a unique asset class to talk about today. Generally, we're talking about self-storage, mobile home parks, multifamily, short-term rental, that kind of thing. But today, we are talking about industrial outdoor, which is something that not a lot of people talk about, not a lot of people buy, but it is an interesting asset class and something I'm sure a lot of you guys might be interested in. So we got Blake Rodgers with us on the podcast to talk about this. He's from Steel Peak Properties, and they focus on industrial outdoor. So Blake, thanks for hopping on.
What's up, Gabe? Thanks for having me. Appreciate it.
Absolutely. I told you before we got on here, we always like to start with stories. We like to hear how people got to where they are. So why don't you take us to the beginning of your story in real estate and tell us how you got here?
Yeah, sure. So got into real estate roughly 10 years ago now, actually in college. Had my first internship in college, kind of fell into it. I was a college football player, actually went up to Washington, where you're from, to go play for the Huskies on a scholarship. And go Dogs. So that was a good time. And then ended up transferring down to San Diego State University. I'm from Orange County, so pretty close to San Diego. And when I got to San Diego, ended up having to change my plans from football, like going to the NFL was like, the goal my whole life. And then I realized, okay, I'm not going to the NFL now. What am I going to do here? So I'm talking to my dad, I'm talking to, guys in my fraternity, trying to figure out what to do. And everyone was telling me, you should look into commercial real estate, dude. Like your personality, like, I think you'd like it. It's similar to sports, like eat what you kill. So I was like, okay, let's go into commercial real estate. And so I got a couple internships as a broker and started as a commercial real estate broker early on while I was in college, and did that for about 9 years and ended up at a big corporate shop, JLL, one of the biggest in the world.
Oh, yeah.
And got lucky. I joined JLL on one of the big industrial teams right when industrial got super hot in like 2020, 2021, when COVID kind of skyrocketed our market. And so I was working in the San Diego market, all things industrial. And then I quickly fell into what I do now, which is industrial outdoor storage. And at the time, I was representing corporate tenants looking for space. And these were companies, these were contractors that needed yard space. And so they needed, smaller buildings with excess yard, which is what industrial outdoor storage is, IOS. And no one was specializing in it at the time. Kind of newer asset class, has not really been institutionalized. There wasn't as much money in the space yet. And I was like, why does no one know what's going on here? There's no data, no comps. And so I was like, I'm going to go full throttle into this, and I'm going to become the guy in my market. And so I started doing a bunch of deals. And right at that time, as I was tracking all these iOS deals as a broker, mainly on the leasing side with tenants, a bunch of capital flooded into the space. One of my clients back then is one of the biggest groups in this space, investor, who I compete with now on some deals, right? And they raised like 750 million. So they needed to go buy $1 billion or $2 billion of this stuff. And so I just started tying up deals with them and with other groups like them. And that's how I kind of learned the space. And then eventually had enough success where I looked at, one of my buddies and was like, let's go try to do this on our own. And we started doing our own deals. And that's kind of how Steel Peak Properties was formed. So we left brokerage. My partner was a broker as well, but he was on the debt side. And we left brokerage in 2023. End of 23, we launched our company in January of 24. And now we're buying our 10th deal in the last like 18 months. Yeah. And raising institutional capital. And we're buying all over the Western US.
That is awesome. Yeah. So great trajectory, 1 year, 10 deals. I mean, I know you had a lot of practice before that, but even so, when you guys launch a new company, it's good to see people with, good traction to start it off with. Let's talk specifically about the asset class itself. Let's dig into it a little more because it's not something a lot of people understand or even aware of. Everybody understands industrial, big warehouses, places where, contractors rent, where Amazon rents, stuff like that. People understand industrial, but industrial outdoor is not as well understood, but people usually get it once you drive by it and you understand what it is. So tell us a little bit about specifically the asset. What is it and who rents from you?
So if you think traditional warehouses, one of the like the common specs or like fundamentals of traditional warehouses is that you buy a plot of land, right, and you build a warehouse on it, and then a portion of that land has to be parking, landscaping, stormwater retention, etc. Like there's all these other development requirements, and usually the percentage of the land that is built out for normal warehouses is roughly like, call it 35 to 50%, depending on what market it's in, how old that product is. Like a lot of the older product is closer to like 45, 50% coverage. And so that word coverage, that's really just like floor area ratio. It's the building coverage on the land. So how much does that building cover? And so an easy way to look at iOS is if your standard industrial is 35 to 50%, iOS is going to be like sub 20% coverage, 25% coverage, depending on the deal and how it's configured. So basically, it's really just a smaller building. They can even still be big. They can even be like 50 to 100,000 feet, but imagine that building on like a 10-acre site. So most of the site, the value's in the land and the value's in the zoning, because the zoning is what allows you and allows these different companies and these uses to store product outdoors or whatever they want to do outdoors. It's that land component that's the most critical to their business. So like what we buy, for example, if you're like driving down the freeway wherever you live, and you see like a United Rentals or a Sunbelt Rentals, those are like the construction equipment rental groups. You'll see them on the freeway. You'll see like a big sign. It's usually a smaller warehouse shop building. And then they have a big yard, and that's where they store all the construction equipment out there. And you'll see like crane companies, groups like that, or groups that are parking a bunch of trucks. That's really what iOS is. It's construction, it's logistics, it's all those heavier but smaller sites, and that's really what the asset class is.
Yeah, and so even though it is outdoor storage, so you're storing things outdoor, out in the elements, all that kind of stuff. Even though it is specifically outdoor, there's always some kind of structure on it. Correct? Usually, as I understand it, I've never bought one, but I understand that generally they have a warehouse on it. You were mentioning 20 to 25% coverage. So when you're looking to buy these kinds of deals, you're actually looking for warehouses with additional space.
So our company is looking for buildings on it every time that we buy it, but there is a large portion of iOS that's just purely yard. So trailer parking, container storage, uses like that, just pure laydown yards for contractors. So sometimes they don't have buildings, or sometimes they have very small, like just office trailers that you bring on site. But if you're buying service facilities, that's kind of where you start going into like the smaller shop space with the yard. That's what Steel Peak focuses on. So everything that we own and everything that we buy has some sort of building on it that's more functional than just like, you brought on an office trailer and put it on the site.
And do you Do you generally have to change the zoning in order to allow for outdoor storage? If you're buying, if you're buying a warehouse and it's specifically for indoor warehouse space, do you have to change the zoning, or does industrial zoning generally cover indoor and outdoor?
So everything that we buy is by right zoning. So it allows for outdoor storage already. To go get the zoning changed is just too much and takes too long, and it's not worth the risk. Yeah. So we don't take any zoning risk. And so you'll see in these markets, and you can tell like generally where all of these industrial pockets are in these submarkets. And then usually you'll see, either they're scattered in between some of the bigger box buildings. You'll see some like smaller, low coverage buildings with yard in there. So you'll be able to like see iOS buildings on an aerial. And then there's also like heavier zoned, like the cities will have like places where they put the heavier zoned industrial. There's always like a couple really heavy zones in most markets. And then there's some lighter and general industrial zones. But the heavier zones, that's where like you'll see crazier uses, like the big like cement companies, asphalt guys, like bigger groups like that the city doesn't really want near residential, and they don't really like these types of uses. So sometimes those are on like the outer outskirts, skirts of the industrial submarkets. But you'll see them everywhere, and in most general industrial zones, iOS does work. But there's a bunch of nuances to the zoning. That's a whole different kind of conversation.
Yeah. Do you like heavy versus light industrial zoning, or does it not matter to you?
Light industrial zoning typically doesn't work. So it's usually like general industrial and up. Okay. Is what works the best. Yeah. Light industrial, sometimes you can get away with like more of a parking use, like a cleaner type of iOS group, like think like an enterprise rental car or something like that. But we usually try to stay away from the lighter industrial zones.
Interesting. Cool. Well, let's talk about underwriting. That's something I'm sure it's pretty unique to this asset. Generally, I don't know anything about underwriting industrial, so you actually walk me through it. What are you looking for? What are the key like green flags, and what are some red flags that you see when you're underwriting this stuff?
Yeah. So we start out exactly what you talked about. Location, is the property, does it have a building? Does it have excess yard? Is it under 20% coverage? Typically roughly 20-25% coverage. And then if it checks all those boxes and it's in a market that we like, that has good fundamentals, then we go into lease term. Lease term is really important. Well, I guess zoning has to check the box first, right? And then what are the existing lease terms? Everyone's different. Every investor is different. We're value add driven investors. So we're looking for deals that we can go in, do improvements, CapEx work, and then release it at a higher rate than where it currently is. So a lot of the deals that we buy are vacant. We try not to buy deals that have more than like 3 years of remaining lease term on them at the moment.
And these are, I would assume these are all triple net type of leases.
Yeah, exactly.
Right?
Yeah. They're mostly single tenant, triple net industrial deals. Or if they're not triple net, we're going to go, release them and we're going to do triple net leases. Yeah. So, we look for short-term leases, and then, you just got to know your data, and you got to have broker relationships and understand where market rents are, and then figure out what that's going to take you, how much it's going to cost to get you to stabilization. And we're looking to stabilize our deals within as early as like 9 months. If it's vacant, maybe even 6, ideally, if we can, but usually construction takes a little bit. And then,
so when you're talking about value add, when I hear outdoor storage, nothing pops to mind in terms of how I can improve this property, because literally it's just you're storing things outdoors. So what is the value add for an industrial outdoor storage?
So remember, we're buying all stuff with buildings. So you still got like a 20,000 foot building, 20,000 foot building. So I'm doing everything typical that you would to that building: exterior paint, lighting, interior office improvements, flooring, restrooms, paint, whatever it is, standard TIs. So you're doing all that to the building. And then if the building isn't as functional as we want it, we'll go punch in additional like roll-up doors too into the building so that guys can drive through the building if that's, if the site works for that. Or if there's only like one door, we're going to want to put like one or two more in because we know that's what our tenants want. So things like that. And then the yard, you're either going to repair the asphalt, you're going to re-gravel it. Maybe you're going to do some rough grading in certain areas, new fencing, lighting, if that's needed.
Security cameras, I'm assuming. Or I guess that's something the tenant would do.
We actually bring in security cameras to every site when they're vacant, just for security and extra security as we're like going through our lease up process and construction process, as well. So it's minimal though. It's minimal. We're not doing like a ton of CapEx. That's one of the benefits of iOS.
Yeah. It sounds great. And you mentioned, in the underwriting, one of the things that you guys look for is you're looking for specific markets in a market you want. For industrial, people that I've talked to before, they generally want bigger markets. They don't want like, sub-markets. They want a Dallas, Fort Worth. They want, a Seattle, San Jose, whatever. They don't want some podunk town. Is that the same for iOS? You guys only want the bigger cities, or do you guys 100%. Invest in smaller cities as well?
Yeah, we're like major MSAs throughout the Western US. So we just handpicked like 6 to 8. We're in 3 markets right now, but we have 6 that we really like, and then we're probably going to move into like 8 over the next year or two. Very cool. But these are all like top industrial markets that have really good fundamentals, major populations. They're well-known markets for industrial. Yeah.
And what about, let's take it down to like a cap rate basis. What are you guys buying? Well, if you're vacant, there is no cap rate.
Yeah, exactly. So we don't buy on a cap rate. We just solve to a return that is a spread over, where we can sell it. So ideally, hopefully we can sell it at a good cap rate, and our return that we're solving to, our return on cost, is going to be over that. And that's nice. That margin is where we make our money. And then every market has a different cap rate that you can sell it at. So your return on cost changes depending on the market, but that's how we're looking at these deals. It's IRR, it's return on cost. We're actually underwriting shorter term holds than typical, like 3 to 5 year holds. Some groups will do 7 to 10 year holds. But we don't have like a fund where we have partners, institutional partners. We're working with like family offices and groups like that. And so we're trying to add value, stabilize, and then either refinance or sell within like 2 or 3 years, ideally.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast. And I know industrial had, it's had its 15 minutes of fame there in, 2021 to 2024. It was the hottest thing out there. Is that still the case? Is it still hockey sticking all the way up, or is it kind of stabilized now?
Thankfully, I'm in iOS, so it's a complete different story, and it's different in every market, actually. Yeah. Because there's some markets that have been hurt a little bit more than others, like markets that are really driven to like large ports, things like that, where during COVID, there was such little supply of land that these groups needed to park trailers on to get them into like Amazon warehouses, that rates just went ballistic. And now that's kind of calmed down, right? So some of those markets aren't as good, but there's other markets that are like more steady, that are more focused on like construction, for example, is what we like. But yeah, the greater industrial market has been softening a little bit, obviously, since COVID. And there's been a big price discovery. There's been, markets that have been overbuilt because developers were building as much as they could when rates were zero. So it's been tougher for different markets. But from what I understand, general industrial, it's a different story. But iOS in the markets that we play in has been really good. Like we see future rent growth. We're doing leases that are at big numbers. We're executing our business plan, so we're still really bullish.
Nice, I love it. All right, well, we have run down the clock. We're running around the 20-minute mark right now. But before we move on, I always like to ask, what's the horizon look like for you guys? What's your future goals?
Yeah, we've got a lot of them. We've got some lofty goals. We're hopefully looking to become a big player in this space on the Western US. There's not a lot of guys on the West Coast that specialize in just iOS. We don't buy anything else but iOS. So we want to become a group that is a contender, and we're looking to purchase more quality assets that have, smaller buildings with excess yard in these markets. So if there's any brokers listening, we're playing in Seattle, Salt Lake, Denver, Southern California, markets like that. So we want to become the top buyer in those markets, ideally, for this type of product. And that's our goal. We're looking to buy roughly 500 million of this stuff over the next few years is what we want to do. So we're aggregating a big portfolio, and we want to grow our team as well. And so it's exciting stuff.
Nice, man. Well, I love it. All right. With that, I'm going to move us on to the quick question round. Are you ready?
Yeah.
Let's do it. It starts with education. It could be any form. It could be a conference you've gone to, a mentorship program you've been a part of, a movie you've seen, anything. I just need 2 recommendations, one for general life wisdom and then one for real estate.
General life wisdom. I hired a performance coach, mindset coach, like 4 or 5 years ago that I've been with. I highly recommend everyone go get a coach if they can. Go check out jasondreescoaching.com. I'm not paid to say that, but those guys have really helped me out, like in my career, personally, professionally, more so like life, more so mindset. And so I really, like, before I ever became, an investor or even thought that I could do this, it was like the mindset stuff first that I had to dial in. So that was the biggest.
It's unique. So they're performance coaches, not specifically business.
Not business. It's just performance. So it's mainly based off of mindset. Jason Drees is like the head coach. He actually wrote a book that's really good about mindset. And so I would start there, like read that book. And then, I'm sure there's other coaching groups like similar to like Tony Robbins type coaching, but a little bit different. So that's been probably one of the biggest factors for me in my life.
Nice. How about for business or real estate?
For real estate, I think mentors is the number one. Read as many books as you can. I when I got started in real estate, I told myself that I had a rule where I have an unlimited budget for books and for courses for real estate. And nice. So if I, like on a podcast like this, if someone tells me about a book and I think it's interesting, I'll look it up and I'll buy it immediately while I'm like driving, whatever I'm doing. And so I've read, hundreds of books over the last couple of years just because I was like, I will not have a budget on investing in myself. And because that's the biggest return that you can get is investing in yourself. So get a mentor, ideally someone that's in your space doing what you want to do. If you have to, pay that person to learn from them. Like, college is good. I didn't learn anything in college that I'm using right now. I mean, the social skills are good, right? I'm not using anything that I learned in like my finance classes or anything like that. I'm probably using a little bit of my marketing in my entrepreneurship classes that I took. But even like some of my buddies that are getting their MBAs in real estate or their masters in real estate, it's different. You got to go out and you got to do it, and you got to take action in real life. And you need someone to like cover your blind spots too. So the biggest thing that we've ever done is, like, even though we're a small company and we're just getting started, we had someone tell us early on, build a board of advisors and for your company. Even though you guys are young, like, this is what I wish I would have done when I was younger and just starting my company. You guys need a board of advisors, even if it's only 2 or 3 guys, whoever it is, guys or gals. It's going to be a huge difference maker for you. And so me and my business partner, we did that, and we have like a, internal advisory board, and it's a really badass guys on that have sold huge companies. They've done what we've done, and they want to give back, and they want to help people that were in their position. And so if you put yourself in that position, you just ask, the return on that is like infinite. You know what I mean? These guys don't want to get paid. They just want to help the younger generation. So that would be my biggest advice. I don't even have maybe a specific book, but like just that general, take that kind of stance and change your mindset like that. And that's been really beneficial.
That's actually, you're the first person to recommend that, build a board of advisors. And I think that is really is a very good advice, because like you said, you don't know where your blind spots are because they're your blind spots. You don't know the things that you're missing. The only substitute there is no substitute for experience, and somebody who's been through it, who understands, the highs, the lows, they've built their company, it is invaluable to have them on your team. So if you can build that board of advisors, they can shortcut your trajectory to where you want to go.
Oh, yeah.
Really good advice.
Yeah. Like,
All right.
everyone we use on our team now is like come from a referral. So, and they're your board of advisors. They'll refer you your attorneys, they'll refer you everyone. So it's huge.
Nice. I love it, man.
Yep.
All right. Next question is for your younger self. Let's go back to the Blake who was still out at UW. Go back to him, look him in the eye, give him one piece of advice moving forward.
Man. Well, if the Blake at UW is different than the general, probably your audience, the Blake at UW was, you should stay and keep playing football at UW. But I guess the advice I would give is if you're in college, get an internship right now. No matter what you're doing, if you want to transition into commercial real estate, let's say even if you're a broker and you want to get into investing, you got to go work for someone for free for a little bit, or shadow them, show them that you're like willing to do that. It's a really huge gesture. And most of the time, if you do that for someone, they're going to refer you to someone until you're going to get a job no matter what, if you do something like that. So the biggest thing is, I think, and I tell my little brother this, he's a lot younger than me. He's in college right now, and I'm having him shadow me as well. And I'm like, you got to get as many internships as you can right now. And so that's the biggest thing, is you just got to get out there and start doing it and just learn trial by error and just get in the game. That's the biggest thing. Just get in the game and don't be afraid to fail.
That's one thing I wish I had done. Hindsight's 2020, but getting a job in, the type of asset that you want to get into, if you want to buy industrial, if you want to buy self-storage, mobile home parks, whatever, getting a job at one of those companies, it could be doing anything, absolutely anything, but just being in that environment, it will shortcut your learning curve more than you think. So yeah,
Oh, yeah.
that's really good advice. I'm going to move us to the next question. This is about the U.S. You've mentioned a few metros that you guys are invested in. I'm going to ask you to choose your favorite child and whittle it down to the metro you're most excited about investing in today.
Yeah, I can no longer gatekeep it. San Diego is the best market, but I'm biased though. That's our home market. It's just the market that we know the best, but it has really good fundamentals for what we do. If you're doing multifamily, it's a great market. It's a great market for self-storage. Any commercial real estate that's driven more so by like population, and like we have people moving here from LA, people moving from San Francisco. Like, although a lot of people are exiting California, San Diego is like a great little pocket where it's still an incredible market. And
it's beautiful.
It's beautiful. It's land constrained is the best part about it. So supply is, there's barriers to entry, and you can't just build unlimited product. And so it's a unique market. We love it.
Nice. All right. Next question is about finding deals. It all starts with generating leads and getting in contact with the seller. So what is your favorite way to find new deals?
My favorite way is to find guys who were me before I came over to start this company. So I find the brokers at these shops that specialize in the product that we buy, and guys that are doing, the most deals in this space and that are taking it seriously and that are passionate about it. So, but our main source of business is brokers. They're really like the lifeblood of our business. And both myself and my partner, we were commercial brokers in different capacities. But we would love if brokers invested in our deals with us. We need them for off-market opportunities, and then we use them to lease up our deals as well. The guys that usually help us buy it, we'll keep them on for the leasing, and hopefully they can help us sell it as well. So we get a lot of our market, most of the seller relationships are controlled by brokers. So it's all about that.
Yeah. I feel like industrial is kind of unique in that sense, where I've never spoken to somebody in that area who does a lot of off-market lead gen, like, sending mailers, doing cold calling. Everybody goes through brokers. And I feel like that's unique in industrial, which kind of makes sense. There's a lot fewer industrial properties than there are, multifamily or self-storage or whatever. And I'm sure the brokers that are out there, they have a relationship with these sellers. So it makes sense that you're talking to the brokers more so than you're talking to the sellers.
There's so much money in commercial real estate brokerage. Like, these guys are like very high level, and they're making a lot of money. So they take their job really serious, and they're not going to let someone come in and, build a relationship with their guy. So they control a lot of the sellers in these markets, because, they're so highly motivated. I guess going back to that other question, like, go become a commercial real estate broker. Like, that is one of the best things you could ever do, is start out as a broker and then do whatever you want to do after that.
There you go. All right, moving on. This is about lessons learned. Not every deal that we get into goes the way we expect it. In fact, most times, if not every time, something goes wrong, and that's when we get to learn a lesson. So what was a deal that went a little sideways for you? And then what was the lesson you pulled from it?
Every deal goes sideways. We have a saying, if the deal doesn't die at least twice, is it even a deal? Or are you the guy that just, you're paying more than everyone, or you didn't find what was actually wrong with it, and now you're stuck with it.
That's always my fear.
So
I need to know what's wrong with the property.
Like, if it goes too smoothly, you're kind of scared. You're like, what's going on here? But I mean, as an example, we're doing a deal right now where the city has just lost the certificate of occupancy for the building. So it's just like, and the seller doesn't have it, the city doesn't have it. So like, we're in escrow and we can't really buy this thing until we know that the building was built to code. And so we have to go run this whole process. And so just learning things like that, like different cities care more so about stuff like that. Like a huge lesson learned is don't try to do everything yourself in due diligence. Hire professionals, spend the money. Like we use as many third parties as we can, like zoning reports, PCAs, so inspections, environmental reports. Like you got to do it all, especially if you're raising outside capital. Like you have to know, like you need to make sure that the deal is de-risked and you got to protect your investors' capital. So like that is like a very crucial component. Like don't ever try to skip over anything. Like you gotta do it all very thoroughly.
Yep. You make your money on due diligence, because if you don't follow your checklist to the point, then things can go wrong. They will go wrong because things always go wrong. But when you figure it out in due diligence, that's when you can actually take action and rectify things before they turn into a real problem. So
try to control as much as you can.
There you go. All right, that leads us to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a two-parter. Where can they find you? And then what can they expect when they reach out?
Yeah, sure. I love mentoring like guys and gals who are trying to get into the space and who want to learn commercial real estate brokerage or investing. So I'm always happy to chat and or meet for coffee, whatever it is. So I love, because there were so many people that I had met with that gave back to me and that still do right now. So you can check out our website, steelpeakproperties.com, steel like the metal, peak like the mountain, properties.com. And then you can just connect with me on LinkedIn too. I'm on LinkedIn. And so shoot me a message on there and I'll normally respond to those as well. So yeah.
Perfect. I will put that link in the show notes. So if you guys want to reach out to Blake, all you got to do is click the little more in the description. It's going to pull down that full description, and in there you can find his links. All right, man. That wraps it up.
Awesome.
Thank you very much for hopping on the show.
Yeah, I appreciate you, man. Thanks for having me.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you guys want to support the show, just leave us a review. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at Gabe at therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.